Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. And in tonight's video, I want to go over all of the trades and positions that expired for expiration week. So now that we're past expiration week and into the weekend, just kind of recap all of the positions that we had kind of leftover positions that either were partially exited earlier in the month and now have expired, and we kind of let some legs expire as we get towards the end of the month, or positions that we rolled in the case of SMH, and then also go over our opening trade in IWM. So let's actually start here with IWM since we can get this one knocked out pretty quickly. We basically entered a calendar put spread in IWM. And again, with these calendar spreads, what you got to remember is that we're buying the back month, which in this case is the April contracts, and we're selling the front month, which is the May, or I'm sorry, we're buying the back month, which is May, and we're selling the front month, which is April. So again, buying the back month, selling the front month, both of those contracts are done at the 124 strike on the put side. So we're definitely playing this a little bit directionally bearish, and we are doing this for a $1.10 debit. So for IWM, this is basically what we're looking at is we want the market to move down to about 124. So we're playing it just very slightly directionally bearish. But when we actually look at, say, a simulated trade here, you can see that we actually have a pretty wide window of opportunity to make some money on IWM. So anywhere between about 126 and 3/4 or so, all the way down to about 121 currently is our profit range in IWM. And the reason that we did the calendar spread was because implied volatility is very, very low. It's in the 1 percentile, which means that it's never really been any lower than it is right now. And so the only thing that we can do, we can't do any option selling strategy because premium and pricing is so low. The best position that we can get into is a calendar at this point because it's just a pure play on this volatility differential and hopefully a volatility expansion in IWM, even if the market starts to rally. The other trade I want to go over real quick is our hedge or adjusting trade. So we did have an opportunity to roll our SMH call spread. We had the call spread in March, the 57.58 call spread. Had an opportunity to roll that out from March to April. So you can see we rolled that position from March to April and took in an extra 10 cents in credit. Now, even though the market for implied volatility really in SMH was a lot lower than when we originally entered the position, it still had really great implied volatility. And this allowed us to roll in the contract from 1 month to the next and still take in a credit, which is one of our golden rules in rolling, is that we want to be able to get paid to roll out to that next contract month. So you can see implied volatility has definitely gone down since we entered the position, but we're still bearish on the position, which is really key for us to continue to roll this position. We still have to be kind of our underlying assumptions that we're bearish, and we want to keep that underlying assumption for the next contract month. But even with implied volatility lower, we were still able to get paid to roll it. So we felt like it was a good idea because it just extends the trading timeline. We could have either taken a loss on expiration, or we could get another 10 cents, which reduces our risk, and give the market another 30 days to move into an area that could be profitable for us. So for in this case, rolling was the best decision that we could possibly make. Instead of closing out the trade at a small loser, rolling it out to the next month, again, reduced our risk and gave us more time to be right and allow the market to hopefully move down lower for SMH. So as far as closing positions, I'm going to go over all of these. We're not going to have a chance to go through all of the different charts and everything, but you can go back through the archives right in here. You can just click the playlist button in the top left-hand corner of this screen. But as far as all the positions that we had, we did end up closing out and buying back our XLU Iron Butterfly. That was a nice position that we bought back. We saw XLU basically trade sideways throughout the month. Implied volatility headed lower just a little bit, and so we took a nice $78 profit on that one. Our GoPro vertical was just a big loser. The GoPro never moved in the direction that we wanted it to go. This was a small position, but we did take a $95 loss. The entire position expired out of the money, and that's just what it is. So we had that position to hedge other positions and didn't work out. We did buy back our calendar in Pfizer. We bought that back, that 36 call, for a 20-cent debit. So we basically took a $40 loss on that one. Our Strangle in eBay, we let expire, we bought back our Strangle in eBay that we continued to hold, and we had made adjustments throughout the cycle and kind of buying back parts of it. After all adjustments, we only took a $20 loss on the eBay position, which I think is pretty good. We were able to reduce our risk by making adjustments along the way in eBay. Our Iron Condor in IWM, after all adjustments that we made, only took a $5 loss. This one, again, is really key because this is a position that moved completely against us. Our Iron Condor was below the market. The market moved against our position to the top side. And even after all the adjustments that we made, we only took a $5 loss, which could have been much more. So again, just really helped out to make an adjustment in that case. Our strangle in Microsoft, what was left of it, we let expire. We took a $36 profit after all adjustments in this position. We took this partially off throughout the month, and then we're just holding on to 2 long contracts kind of as a lottery bet. So we were holding on to these 47 calls and these 38 puts. Again, those both expired. We didn't expect to make money on those 2 individual contracts, but overall we made $36 profit on that. Our Iron Condor for SPY, after all adjustments, we took an $11 loss. Again, that was really good. We could have been much higher, but we continued to hedge that position throughout the month. I think we hedged it twice, and that definitely helped to reduce our risk in the SPY position. Our TLT position, this is really cool. TLT actually did come back full circle between our strikes, the 144, 146 call spread and the 127, 125 put spread for a $40 profit. I do want to just quickly see if I can load up this chart here for TLT, because I think it's really key to see that the stock really wasn't where we wanted it to be for part of the month, but we just had to let it go and let the probabilities work themselves out, and it did come back around. So we wanted TLT to be between 127 and 144, and you can see partway throughout the month, it was actually much lower than 127. So here's our strikes here at 127. So we didn't want it to go below 127, and we did want it to go above 144. So 144 was fine, but you can see it absolutely tested us for about a week and a half below that position. So if you had a stop loss on at this point, this would have absolutely triggered a stop loss, and you would have guaranteed yourself a losing trade. But you just got to let the probabilities work themselves out, and sometimes the stock comes back into the range long term, and again, it's just a matter of holding that position and being diligent and believing enough in the probabilities to let it work itself out. And then finally, our GLD position, part of the one that we had exited earlier last week, had expired. So after all adjustments in GLD, we took a $62 loss, which wasn't that bad after we had used some of that adjustment to reduce our potential loss and increase the overall credit in the trade. So again, with GLD, we took a $62 loss overall after all of the adjustments. All right, I know that was a lot to go through. Expiration is definitely a tough time to just kind of recap everything, but it does feel good to have a lot of these positions off, and looking forward to the next month and starting to add positions this week. As always, if you guys have any questions at all, please add them right below this video in the members area of the website. And until next time, happy trading.